Greetings and welcome to this edition of Mentor Mike's Market Movie. Today is Friday, December 7th, 2012. Right now it's about 5:46 p.m. Pacific time, so we're looking back at a chart that is starting a little over 12 hours ago. And a lot of you are watching this because you're hoping to hear more information about the launch of our trading room. We are definitely moving in that direction, but there's a lot of ducks that we have to get in a row first. One of the things that I have been working on lately is a set of chart templates that we can stick with. We want to simplify the process because the course and the trading methodology that are going to go with the trading room need to be uniform and more or less set. And so I'm looking for chart templates that are easy to read and have all of the necessary accoutrements for effective trading. So we have a 1-minute chart here that I'm calling One Trading Room Combo. It's going to have data from 2 time frames, as you can see. We also have one over here, which I'm calling, well, this is the exploded MACD section, but if I restore the whole chart, you'll see it looks like this. This one is called One Trading Room Backup. And let's put it back here. In case you didn't know, there is this function. You can maximize one panel of the chart. So if that's what you need to look at, there you have it. I've also got our turning point chart here, One Trading Room Turning Points. And as you can see, I've noted the turning points for yesterday, for Thursday. And yesterday we had a low, high, low, and a possible high. And the closing price at the end of yesterday's day session was 1412.75. And at 5 a.m. the next day here, or yeah, this is 5 a.m., you can see it's about 1409.50. So it's down a little bit. And let's take another quick look at this. Now it could be that we have a 4 turning point day on Thursday and that the price is going to sell off and make the first turning point tomorrow, or that is to say today, Friday, be a low. But 4 turning points is, while possible, is not the average, so it's more likely that the market's going to go up and that the first turning point today, Friday, is going to be a continuation of this high. In other words, this high is going to be over here somewhere. So that's one of the things I'm looking for. Also, why do I think that? Because the MACD, the line version, is bullish and heading up, and it's just breaking above the 0 line. The histogram is in positive territory, and the stochastic appears to be moving up also, and it's in the upper half of the scale. So there's a lot of reasons to kind of suspect that our first turning point today is going to be a high, and therefore that on average we're probably going to have a high, low, high configuration. So we start out each day kind of taking a look at the turning point situation, and I have found through experimentation that the particular parameters that I'm using on this turning point chart, including the parabolic, do a pretty good job of isolating the turning points with the parabolic. And no big surprise there. Delta turning points, of course, are partly the brainchild of Wells Wilder. He's the founder of the Delta Society, and the parabolic SAR is actually his brainchild as well. Now, he invented the parabolic SAR many years before he met Jim Sloman and was introduced to the Delta phenomenon, but it's not too much of a stretch to use one of his inventions to help us see the turning points with the theory that he helped to popularize. So all of the participants in the trading room are going to, of course, be encouraged to use NinjaTrader. And if so, you'll have access to your own versions of these templates. That is about all I wanted to tell you about that. So let's go ahead and get started. Now, we're going to start about 5 o'clock with our replay today, but I think that the trading room is probably going to open officially at 6 a.m. Now, on any given day, I might be in there earlier than that and have it turned on, but it'll be open by 6 a.m. at the latest because, let's face it, if I'm going to run this all day, it has to be done in a manner that is not too disruptive of my creature comforts and all. I want to help you guys learn how to trade and pay your tuition for your course and all of that, but at the same time, it's got to be more fun than work because I don't need to work, and if it stops being fun, then I'm going to find something else to do. But I think since I'm here watching the market most days anyway, we can work it so that you can watch it with me. Now, another thing that I'm going to be doing is I'm changing the automated trade management function on my templates so that we can have the market covered by the Ninja platform most of the time. In other words, once we're in a trade, the stop is going to pretty much move on its own, and that's so that I can get a break once in a while without jeopardizing the safety and integrity of the market and your money. So that's one thing. The other thing is that I anticipate that some of the beginners in the trading room will be starting with a smaller sized account, which means you'll probably be using just 2 targets on the peeling off strategy. But as your accounts grow, I will encourage you to move on to where you can trade 3 targets, because obviously that's going to geometrically increase your profitability. And so what I'm probably going to do is run 2 separate accounts, one for 2 target trades and another for 3 target trades. So we may end up having 2 separate dome screens on here that are one for the 2 target trades, one for the 3 target trades. So that'll be interesting. I've got to play around with that. We're not going to get into that today, however. Today I'm going to be using 2 targets, 3 contracts, the basic beginning peeling off strategy. And so I think without further ado, let's go ahead and start our data feed. Bring out our little control panel here, and away we go. Now, one of the things I have set up is once we are into the day session, which begins when we get to this green line, the parabolic for the higher time frame is going to kick in. It's the same time frame as we have on our turning point chart, and I'm going to stop it right there because notice that we're breaking to the upside. We have the faster stochastic breaking above the slower stochastic. I'm sorry, MACD is what I meant to say. But we do have this stochastic breaking above the 50% level, and this histogram over here is also breaking above 0. So that would be in keeping with my theory that we're going to end up with a high as our first turning point of the day. But here's something else to be aware of. We're a few minutes away from 5:30 a.m. Pacific time, and today we have an important report coming out. The unemployment rate report. Now let's see, back it down just a tad. Non-farm payrolls, but this one right here, unemployment rate. This was the big meter of the economy that was looked at very closely throughout the presidential campaign, and it's still being looked at pretty good. And there was a lot of scuttlebutt in financial sources that this was expected to be pretty good today. And if that was the case, we could expect some bullish response from the market. So again, that is very much in keeping with my belief that we're going to end up with a high for the first turning point today. And now we've got our oscillators on this chart starting to turn in that direction. So for all those reasons, and also the fact that we kind of have a double bottom here, you could make the argument that we have a 1, 2, 3 bottom. I'm going to go ahead and get long. So we will place our trades, and we'll set the arrows and start up again. Spikes down. Whoop. And that's what happened. Now let me pause it. And now notice that our score is 450. That's actually less than what it was this morning when I was trading in real time. It was about 500 and something on this account. On my actual account, where I was trading 9 contracts, the initial trade made something on the order of $1,950. So what happened was it gapped up. The market actually gapped up after the announcement, and all of our contracts were filled at a higher price than the actual orders placed. So not a bad way to start the day. I knew that one was coming, but it was fun to see it happen again. So let's turn it on again. You do have to be careful, though, and not get on the wrong side of something like that, obviously. But what I've found is that when reports cause the market to move with a great deal of force like that, they tend to move in the same direction that the market was headed anyway. In other words, the general configuration dictated by our technical signals tends to come to pass. It's just a more exaggerated version of that is all. Now, as I recall, there wasn't too much more to happen for a while here, so let's speed this up just a tad. We'll go 100 times normal speed. And once we get about 13 minutes into there is our parabolic from our higher time frame. And let's take a quick look here again. We now can see that we don't know exactly where it's going to end up, but obviously we are going to have a high for our first turning point today. And down here is the parabolic that we're looking at on the other chart. Notice that it's 1409.40. And it's 1409.40 here as well. So this right here is going to end up being our high. This is obviously the highest high, but we're counting our turning points within the daily session. So this is going to be the high, and we pretty much know that that's it already. So let's just go ahead and put it in there. And that'll give us some perspective on what happens after that. So that being the case, we now know that this high is not going to absolutely be confirmed until we take out this parabolic on the turning point caliber chart. But we know that things are probably going to head lower, and so what I'm going to be looking for is the white crossing below the red here. So let's turn on the data. We'll go to 50 times normal speed. Okay, now we've got blue below white, white below red, and we've got the cross over here, and we've got the cross on the longer MACD as well, and we're about to go south of the 0 line. So let's go ahead and get short and start the arrow. Boom. Both targets hit instantly. Let's see if we get an opportunity to go again. Now, by the way, when I start adding some of these drawing elements, it disrupts the paint order. So we'll try to get that worked out here. We're going to be looking for the stochastic to head up and then come back down. And let's wait until we get just a little bit more of an indication that we are heading lower, like about that. We've got blue under white now. I'll go ahead and get short again. And both targets yet again. Now, we've got another hook here, and let's see if we can catch one more short trade. You can see that our long-term MACD is clearly going down, and we've got a hook here, a hook here, a hook over here, and we also know that this parabolic is going to get taken out at some point to verify this as the high. So it's not a real big stretch here. We hit the first target and was stopped out, and then the market went further south. But we'll take it. And once again, adding another element here has messed up the paint order. I want to make sure we can see that dodgy channel. Now, the fact that we've got the parabolic looking like this, let's take another quick look at our turning point chart. So here's our high, now confirmed because it's the highest high within this parabolic momentum module, and we now know that we're definitely going to have a low. I'm going to put this in here. Whoops, let's make it lowercase. We don't know necessarily that this is it yet, but we know that there's going to be one. So now we just got to keep watch for what appears to be the lowest low. And one of the ways that we'll know is when our longer term MACD bottoms out and starts back up again. So we'll keep an eye out for that. And in the meantime, we're probably going to cool it with the short trades here because we've already had 1, 2, 3, and you know, the longer we are moving in a particular direction, the closer we get to the end. So we'll see how that goes. Let's start up the data. Go to 50 times normal speed. Notice that our faster MACD already seems to be kind of bottoming out and turning up. And we're hitting some potential resistance here. We've got the trend definer and the red moving average all kind of coming close together here. And we've got our stochastic breaking into the overbought zone. Now, if we wanted to get real aggressive here, we could get long now, but I think we'll wait until things are looking a little more bullish on the stochastic end here. Maybe when our maybe when our MACD starts to break above the 0 line. Well, we have red, white, and blue, so let's do for it. Yeah. Hitting rather low here. But we're watching this. Notice that the faster MACD is staying on top of the slower MACD. Now we're all stuck here along the trend definer. We've got all 4 moving averages all in real close proximity there. You can see the MACD is, well, there we finally broke to the upside a little bit. Notice over here also that the MACD lines stayed bullish the entire time, so that made it easier to ride out this little drop here. Okay. Now notice I'm not trailing the stop with the parabolic. In fact, the new configuration I have on the ATM kind of obviates the need to use the manual stop on the parabolic. Okay, watch the red and white over here. I've learned that a lot of times when you're going from point A to point B, there will be at least one big zigzag in the midst here. So if this is our low and we're on our way to a high, there's got to be maybe this one or maybe this one before this thing goes up again. Now notice, let's pause, look at how on this time frame over here on the left, white came down, skirted the red, and has broken to the upside. And we've got the start of a breakout to the upside here as well. Let's take a chance and go long. Finally. Not flip that parabolic. Nope, stopped out. Alright, now we're breaking to the upside and breaking above the 0 line. We know that there's a very high probability that we're going to take out this long-term parabolic. How do I know that? Because if there's only going to be 2 turning points, they tend to be at the early end and the late end of the day. They're not going to come this close together. So there's a real good chance that this is going to go up. And I'll put my money where my mouth is. One of the beauties of the trading room is if you don't like what I'm doing, you don't have to take the trade. It's not like I'm actually trading your money. You have complete control. Come on, get that last target. We're after 1 o'clock here now. Okay. Now, even though there's a hiatus and then the market does, this should actually be a red line here. Even though after this 15-minute break, the market does start up again and ultimately closes over here. This is where the market used to end, and that's where pretty much everybody is used to doing it. So that's the way we're going to continue to do it as well. Now, we did have one more trade there. So we had 1, 2, 3, 4, 5, 6, 7 trades, and a fairly impressive 1,012.50. And remember, this is a beginning-sized account. This is a $3,000 3-contract, 2-target set of trades that we just took. Now, with an account that size, you're probably not going to make $1,000 every day, but do the math, and you'll figure out that if you come anywhere near close enough to average that, you're going to be doing all right. You won't have any trouble paying the bills and having a little fun besides. So let's finish up. We now know that this was our low. And this over here was our high. So, first one was a little early, second one more early, and this one was a little late. But notice that we've got our longer term parabolic neatly separating the 3 turning points, and that is echoed with our longer term turning point chart as well. And there's our high. Now, let's make it lowercase. To be precise, we should really put a question mark there, because just like yesterday, we don't know if this thing's going to go higher. I suspect that this is going to stay as the last turning point for today, and the reason being is that a 2 turning point day tends to be a little more spread out, usually at the beginning and the end, and this would be awfully close together for a 2 turning point day. So I think there's probably a good chance that the first turning point on Monday will be a low. It might drift sideways while the parabolic catches up, and then it'll stab down, but we'll see. We'll see. Anyway, let's go back here. That's kind of what the trading looked like today if you were trading with 3 contracts and 2 targets. We'll have more information for you about the trading room as we go along, so keep watching the blog. There will be a very comprehensive webinar that's going to try to anticipate all your questions and tell you exactly what you're going to need to prepare to get ready. And so we'll be seeing you. So have a great weekend, and we'll be back at you next week sometime. Bye-bye.